Welcome to Markets Now. I'm Michelle with Scott Varlick of Koima Varlick, and we're seeing red across the entire ag and financial complex. The softs are down. And Scott, thanks for being with us. We're seeing a lot of panic selling in pretty much all of the markets here. China has said they're going to retaliate against these Liberation Day tariffs. So that's kind of driving the news right now, isn't it?
Yeah, thanks for having me. And it is more of the tariff talk. That's our front headline story every day here now. So what you know fundamentally, what you feel like you have, is taking a backseat currently until we have to get the updated tariffs news. So 34%, retaliatory tariffs from China across the board on everything. We've got some different retaliatory tariffs coming in from Canada. So all of that's in the front headline news, and we have to, digest this, I guess. And it is just kind of creating a lot of panic across the market. So the easy path is lower. We got a stock market that's imploding on itself. I mean, it's, down another over 1,000 points on the Dow, and, hundreds of points on the S&P, and they're hard numbers to swallow. So we're getting into the other end of the phone is pretty nervous. We're all pretty nervous. Uncertainty is ruling over everything. And we all want to know, how quick can this be done? Okay, is this going to be a quick deal? Are we going to have this thing fixed by the weekend? And for me, we're 3 months into this presidency with Donald Trump, and 3.5 years to go plus. I'm not expecting a quick fix. We're all guessing when it comes to this politics. So what we know might not matter that much, but that's just kind of what I worry about. We have to look at ourselves and say, okay, this might be a little bit more of an extended period of time. What are my risks, and what can I do about it?
Right. And Scott, this really feels like when we had COVID and we saw a lot of recessionary talk and a lot of fear because of the idea of lower demand for everything, right?
It does feel eerily similar, to that. Some of the that's fresh in our brain, what happened in COVID and how fast some of those markets down. But the difference is we're still seeing closeouts of $500 profit for cattle. We're still at some prices that are okay, which can also be the scary part. There's a lot of room, for the down. But the panic is setting in now. I still think there's time to do something. It's just not going to be as good, as what it was, for the futures prices. Some of these cash prices haven't, really corrected lower yet. There's still that upfront demand. Demand has been good. The cash live cattle has been good. Feeder prices are still high. So those are hanging on. But as these futures pull us lower, you expect that's going to start to drift. But my point being, we're still at some decent levels here, at some high enough levels. We're seeing some great closeouts. We have some money in our pocket. We're trying to figure out how to not give it back now, just because this is getting a little bit scary. And that's, like you said, the COVID was scary, and that's how the market's traded. And we have that kind of fear entering into this market here.
Yeah. So let's talk from a technical standpoint, specifically on cattle. How much lower will we have to go here on these charts to change the trend of this market?
We've got a lot of room down before we really break the long-term trend. We've seen some big breaks in this market. We saw, for no reason, we're seeing some $15 breaks last fall. We had some, bird flu in cows, that kind of news that didn't last that long into the market, but we're still on this uptrend. So you start to measure some retracements and say, okay, how low can things go? June cattle retraced down to 196 for a halfway retracement. So there's a pretty monumental spot there for the first test. But I think the funds are going to look at, we've got such a long position from the funds, big open interest. So if we are going to start to liquidate, could get, a little bit dicey. But so that's the good news is, if we put a $10 break on this market, we're still in an uptrend. It could be that $10 to $15 break before we get to some of those long-term uptrend lines to test those. So the fundamentals, we're going to be able to fall back on them. I think that's it. We just need to ride the storm here because we have tighter numbers. We didn't see the big heifer retention happening. So if we can get to that point to where some of these fundamentals matter, we're going to be okay. Cattle are in the best position to work their way out of this. It's just, we're going to be looking at a lot of different numbers and a lot of different trend lines here, but we've got room to go down and still be on an uptrend. And as overbought as we were, expect that we could slip just a little bit more here.
Right. And that's the future side of the equation. Cash trade, what are you hearing so far? You kind of alluded to a little bit of this early business, but how do you think we'll settle out? And will we see much volume here, or will people wait until we have a little less uncertainty or not?
Well, we've got a pretty strong basis, and some of these packers were making some moves and getting some 213 trade done yesterday. Even with the lower prices, we're seeing some of this good cash yet. There's some 208 happening in the South here this morning. That's all still pretty decent trade, only a couple dollars off of the high for what the South has had for all time. So that's holding together. And I guess if you're selling cattle, that's the other side of it is you're going to take it. You're going to take those bids as scared as everybody is. So, I mean, it's that's the fear that we can now start to get it a couple dollars lower as we move forward. And here we sit right into April when that can happen. We get to April, and every month, every week in May, we slip a couple of dollars into June and towards the end of June, kind of a seasonal time frame that we have. But this doesn't feel very seasonal the way the markets are acting. So we'll be curious to see if that's going to hold on the live cattle. I'm guessing they're going to pull some of those bids back, but feeder calf prices yesterday, their first little test. I mean, Valentine Livestock was selling the snot out of them. Those prices looked pretty high, and I'll be surprised if that maintains. If that confidence is staying there. So for me, we'll start to slip just a little bit here if this doesn't get fixed. Some of this outside noise is going to finally rule over in our prices.
Right. Obviously, what's going on with the stock market, the outside markets, recessionary talk is overwhelming the cattle market right now, because when we look at tariffs, we did not have USMCA compliant products like beef caught up in the Canada-Mexico thing. And really, tariffs are net positive for beef imports, actually, from like Australia, aren't they?
Yeah, that's an excellent point. The tariffs themselves are not hitting the cattle market so hard. I mean, we import beef, we import fats, we import feeders, so the tariffs actually aren't going to hurt the cattle market near as much as any of these other markets that we're looking at. So from that standpoint, we're feeling okay. It's the $1,200 lower Dow Jones every day that we just got to fight off. I mean, that's when I make the point. I think the cattle are set up fundamentally that they can be okay, and then tariffs aren't going to hurt them near as much, but it's just that mass uncertainty that we have. So it'll be interesting to see how it unfolds, but we import a lot of beef from Australia, and I did hear a little bit of complaining from them, packer, how much it was costing them. But yeah, it's kind of that boo-hoo feeling when you're thinking about that. We can't sell any beef into Australia. So it's a long-term maybe going to be okay for some of that cattle tariff, development, but we're okay on it now. It's the other markets that are going to get affected a little harder by that news in itself.
Yeah, no doubt. And Australia said, oh, we're just going to pass it on to the consumer, unfortunately. So when we talk about other markets being caught up by this tariff news, soybeans, one of those, the hog market, another one, because of what's going on with China, right?
Yeah, that's soybeans, pork. Those are two markets that are going to be, hit by the China news. And we've already seen such a shift to South America from China anyway. But yeah, this is just furthering that nervous trade, and how they can get a low acre number, and we're still trading this much lower today. So it just looks like more pressure, coming from the tariff news. We're going to be, have to read those headlines first thing in the morning, and that's the reaction that we're going to have. So the risk of what we're going to be able to export to China.
Yeah, and we're not selling any wheat or corn basically to China right now, so those impacts won't be felt by those markets. But is there a little fear about maybe cancellations with what China still has on the books for the U.S.? Because we don't normally sell them soybeans this time of year, because that business has shifted to South America.
Yeah, and it can, it can start the shift now, and it seems like you're always wondering when that shift happens. But I think it always seems to delay a little bit out into the summer. So yeah, I think there's going to be a constant fear of them canceling some of these orders. And as it breaks far enough, their fee of canceling is less than what the market has actually broke. So that, if we see this further pressing lower, yes, cancellations are probably expected as it gets bigger than what the fee is for them to cancel. And the corn, yeah, it shouldn't be as nervous, at least with Mexico, one of our, good corn purchasers. We haven't had near the chest bumping happening. So hoping that's okay. And our demand has been pretty good domestically on corn. So, but we do have energies going down. I just don't feel like there's any market that's going to be left alone. I mean, when you look across the board with just everything red with the uncertainty and not sure what's happening, it's not like one can fundamentally stand on its own just yet. Because like we said, the cattle's one thing that should be able to fight this off by itself, even it's unable to do so.
Right. So if this isn't going to go away very soon, we're going to see more retaliation from other countries. What's your best risk management advice for producers right now?
No, what's your risk? What's your goals? Yeah, we don't, these emotional trades, this panic trade is always some of the worst. So you don't want to just quickly, it's easy to hurry up and make a bad decision. So you're going to want to analyze yourself. I mean, we've been trying to harp on just buying puts and moving on, buying puts and moving on. I mean, some of these puts are still at okay prices and I'm okay with it. Yeah, they're not going to make you a lot of money if those puts kick in, but at least we're stopping some of the bleeding. I don't feel like we're in a short-term little fight here that it's going to go away quickly. So trying to protect some of that however we can. For me, it's I want to be able to sleep at night and be able to move forward. So looking into some of those floors, they're not going to look as good as they used to, but still recommending doing some of that.
Yeah, and hopefully folks had some hedge protection in place before we went into this. All right, thanks so much. Scott Varlick with Varlick, and that is Markets Now.